Live from San Diego, this is the Fox 5 Morning News at 7.
All right, some Americans are looking to invest in gold. Joining us now with his thoughts, Fox 5 financial expert Chase Wilsey. Gold, huh?
Gold.
You know what I heard about all this gold excitement?
Let's hear it.
When they were selling those gold bars at Costco, and I went one day to Costco and then I saw limit one. And I said, what is going on? I called my husband. I'm like, should we be buying these? And he's into the gold. I don't think we own a lot of it, but.
Yeah, I mean, gold, it's been interesting, and it's been on a great tear. Don't get me wrong. It's up about over 70% essentially over last year. Last year in 2025 was up like 60%. Now we're up another 20-ish% in 2026. So, I mean, gold has definitely been doing very, very well, and if you held it, congratulations.
So what influences the cost of or the price of gold to go up, and how much? Hasn't it gone up drastically over the years?
Yeah, I mean, I don't know if I'd say drastically over the years. I'd say drastically over the last 2 years, but historically gold, it's done okay. And what I mean by that is you look back to actually 1980, essentially, gold really hit its peak. And if you look at an inflation-adjusted basis, gold didn't reach that 1980 peak until April 2025. So gold, it's going to have these periods of time where it can do very well, but it can also have periods of time where it really struggles. I mean, in the 80s, gold fell about 57% from 80 to 82. In 2011, 2015, it fell about 45%. In 2008, when a lot of people thought, oh, I got to get into safe assets, gold actually was down 25%. So ultimately, what I view as influencing the price of gold, it's difficult to project out. What influences it is people buying it. That's what's going to lift it higher.
But don't people aren't they into it? And they just always, is it one of those things, I always, when we talk about real estate, I say if you hold on to a property long enough and you're able to ride the ups and the downs, property value tends to always go up over 20, 30 years, right?
Yeah, I mean, 20, 30 years from now, I wouldn't be surprised if gold was higher than it is today. But the question is that going to be a good return? As I said, from 1980 to 2025, on an inflation-adjusted basis, you essentially made no money. So could that happen again? Potentially, especially after the big run-up we've seen in gold. It's very possible we have a pullback. I mean, things that go up 70% in a year,
will come
that's not a safe asset that is not immune from drastic downturns.
So from what I'm hearing from you, don't buy gold. Is that what you're suggesting?
I personally don't hold any gold. I don't recommend gold. Big reason for it is, at the end of the day, what is gold? It's a piece of metal, and it's only worth what the next person is willing to pay for it. And I can't tell you that gold's worth $7,000 an ounce. I can't tell you it's worth $10,000 an ounce. With a company, talk about real estate. Real estate, you have rents, you have cash flows. You can value what that's worth. With a company, you have earnings, sales. Again, cash flow. You can put it a valuation and create what I call an intrinsic value of the worth of a business. But with gold, again, it's how much is the next person willing to pay for it?
So if you're listening to Chase and you're like, I'm into it, I'm still going to buy it, then what would be your advice to somebody who wants to get in on this?
If you're looking at buying gold, my viewpoint is the safest way, the easiest way to buy it. There's an ETF called GLD. You can buy that for a 0.4% expense ratio. It's a management fee essentially that comes out each year. The reason I recommend that over just buying the physical gold is when you buy physical gold, you have commissions when buying it, commissions when selling it, not to mention the storage costs that can come with it as well. So be careful buying the physical gold. It can be quite costly, and the numbers can get distorted due to commissions at times.
Is there any metal worth purchasing? I'm going to answer this for Chase. No.
Yeah, I again don't like to buy metals. I am very heavy into buying businesses because I can put a value on that. You get ultimately cash flow. That to me is the most important thing when you're investing, is cash flow. Because again, you're in retirement, let's say. Well, you need income from that. You can't get income from gold. You then have to go sell it, and then it creates, again, a lot of tax inefficiency as well. A lot of people don't realize that gold is taxed at collectible rates, which is essentially in many cases going to be ordinary income rates, where if you have stocks, you have real estate, capital gains are taxed at 0, 10, 15%. I'm sorry, 0, 15, 20% rather than ordinary income. So the tax efficiency of gold is not great either.
I still like it.
Yeah, it's pretty. It looks great. My wife loves gold, but as an investment, it's not my favorite.
And I learned that, and I heard you loud and clear. Honey, it's an investment, honey. All right, Chase, we'll see.